looking at the way IoT data can be used in the insurance business. There is the opportunity to prevent risks, and then you can even use the data for creating opportunities to insure new kind of risks. My perspective is that this connected data is an opportunity. Insurers can leverage this opportunity, and there are many ways for doing it. This is Matteo Carbone. This is the future of insurance.
Last May, I wrote a short piece about digitization prioritization and the need for every insurance organization to step back and ask, what do we want the future state to look like? What do our customers need it to look like? If your organization has asked these questions recently and the answer sounds something like more digital engagement with customers, then you need to get in touch with Marble. Marble has built the first comprehensive programmatic engagement platform for insurance. What does that mean? Marble's suite of flexible and launch-ready APIs can deliver digital insurance wallets, rewards, and incentive programs, and more quickly. So, if you're a carrier, MGA, agency, or fintech offering embedded insurance and want to get even closer to your customer, head to marblepay.com/partners to get in touch. Matteo, it's great to sit down with you and do a recording of this. I appreciate you agreeing to come in.
It's a pleasure.
We've gotten to see each other in person a couple of times now, which is exciting, and we're going to do that some more, but I haven't gotten to share some of your thoughts directly with everyone, so it's good to sit down.
Yes, let's say I've been focused on the insurance innovation for all my career, and IoT, starting with the telematics applied to the personal auto business, has been one of the key areas I worked on since 2011, 2012. I was lucky to work in a market where personal auto telematics was already a thing in 2011.
That is really early. But you and I were at an event together recently, and you were talking about this, and you said your initial reaction was skeptical, right? Or was it skeptical about maybe some of what people say could change? It was getting into risk pooling, that you saw a different path for what some of the early folks were saying about how this could change everything.
Yes, let's say, I'm not skeptical, and I've never been. I felt in love for the potential of the usage of the data, the telematics data, the IoT data in the other business lines in the insurance sector. However, I'm skeptical about the buzzword, about some of the, let's say, we can define it superficial understanding of the potential. So what is the point of the iceberg? What people normally talk about when they refer to this innovation, this technology, I don't think is the most profitable or the most effective way to use the data.
Like what?
At the conference, we heard about the data of the risk pooling. We had a question about this. I frequently receive questions around the pay per use. So I don't think that these are the consequences or the natural use cases for using telematics data. I have seen insurers obtaining great results using the telematics data for claims management, for a more accurate pricing, for changing behaviors. But we are not talking about the data of risk pooling. We are not talking about pay-per-use. There are some pay-per-use portfolios. They are growing, but any carrier that have succeeded in using the telematics data in personal auto had more volumes on the usage of telematics data for tailoring a renewal than in the portfolio that is based on a pay-per-mile often.
I want to explore this more. Why do you think pay-per-mile or usage-based insurance is not is not something that ultimately will take off. And then I want to talk about the risk pooling thing, because that was a great question. I think your response to it was fantastic. But let's talk about why you don't think UBI is the path.
So let's say I think that we need to be precise when we use the word, or at least to define well what we refer to.
Sure.
So if people frequently use UBI to talk about any kind of telematics-based insurance policy.
Yeah.
So I'm positive about the usage of telematics in the insurance policy.
Yes.
If we refer to a niche that is an offer where you have a variable premium that is based on mileage or mileage corrected by behaviors, so where you have not a price defined up front, I'm skeptical for two reasons. The first is, over the past 10 years, I've seen many carriers trying both an offer where they use the telematics data to adjust a renewal pricing or to reward with cashback, rewards, a driving behavior, and an offer with the pay per mile. And before COVID, 90-point-something% of the volumes went to the usage of the offer that was using the telematics data for defining a renewal price, not the pay per use. So before COVID, I was really bold and sure that if you have the two offers, the volumes go in one side, not the pay per use. I made surveys to policyholders in different markets. The premium that fluctuates is something that somehow was stopping many of the people to buy this. People prefer to know what they will pay than the uncertainty. If you make the parallel, it's the same we have seen in other sectors. 10 years ago, we were paying the bill of our mobile phone by minutes. So he was looking at how many minutes he was staying at the phone. Now everybody has moved to a package where you have unlimited minutes and traffic data, or a defined set, but you know what you are paying. You are not exposed to the uncertainty. So why the insurance policyholders should go in a completely different direction? Before COVID, I had a specific expectation that people that have a second car, or people that rarely use the car, would have sooner or later moved to this offer, because they will be more and more confident that they can save money. Because at the end, when we talk about auto third-party liability, we talk about something that is compulsory, that is perceived as a tax, and everybody likes to save on taxes. Something changed with COVID. People stopped to drive. People have heard more retail media talking about that kind of offers. So more awareness on the policyholders, more awareness among the intermediaries, more people that is in a condition where they are driving less. They are not commuting. So all these elements together made the pay per mile or pay per mile adjusted with the driving behavior offers, at least in the US, I have not seen the same in other markets, grow significantly. However, if you sit at the table with any large incumbent that have both the offers, pay per mile, and the usage of telematics data for defining a cashback, renewal pricing, and you ask 100% of the new volumes in 2021, which percentage was on the pay-per-mile, which percentage was on the other offer that use telematics data, pay-per-mile is still smaller, 2, 3, 4.
Yeah.
Smaller. So there is a market for this offer, but it's not the first priority, I think, for an incumbent. So I would suggest to an incumbent, an insurer, to add this offer on their shelf, but is for me the second product they should have that use telematics data, not the killer application.
Yeah, no, I do agree. And I think to your point, it's not to say, no, this will never happen. Don't spend any time. If you can enable it, have it as an offering, because maybe that'll change. As you said, 10 years ago, we all did things one way and not another. Maybe there will be a move down the road, and at least you can compete as that suddenly happens. And we saw that with those who had telematics offerings, not usage-based, but suddenly in the pandemic on the new business side, they were taken up much more readily than they had been pre-pandemic. And so if you didn't have that offering, a customer who's not driving anymore and wants to get the credit for safer driving behavior is going to tend towards a carrier who can offer that, putting aside pay-per-mile, because that's a different issue. So being able to compete in case it moves, but I hear you not making that the primary.
So Matteo, in this conference, we got a question in this panel about telematics that doesn't this mean the end of insurance, because you take out all the uncertainty and you're trying to use the data to make people better risks. So you warn them before they get in the accident, they don't get in the accident, and they see all that. And so they'll just pay, instead of paying the insurance, to pay for the repairs. And I think your response hit the nail on the head of why that's not the case, and why telematics or IoT is not, it's not the same thing as the end of insurance. We still have all the original reasons why insurance has to exist. I wonder if you can share that.
Sure. Let's talk about the basic of insurance, and let's start defining what is risk pool. We have many policyholders that pay a premium to finance the claims of a few policyholders that in the reality will have the accident and will need a claim to be paid. Well, in the traditional world, we have mutuality. We have a few variables used to segment the portfolio. You have higher risk, lower risk, but inside each cluster, you have a mutualization. Things that you don't observe inside each cluster that, based on the variables that you use, you consider similar with the same level of risk. Someone in the reality is more risky, someone is less risky, but you price them at the same level because you are not able to really go so deep. In the past, 15, 20 years ago, we start to use the credit score that allow it to be a little more accurate and to discriminate a little more, but it's still not so precise. Telematics, the driving score, has demonstrated the ability to increase the accuracy of the pricing. So let's go to the extreme, what our audience asked during the panel. We are able to be so precise, we have data that are so good that we identify for each policyholder the exact level of risk. Well, we will have a lot of individuals inside the portfolio, each of them with their level of risk. Someone extremely risky, with a high probability to have an accident during the coverage period. Someone with an extremely low level of risk, but not zero, extremely low. So all of them together will define the level of risk of the portfolio. All of them together will finance the claims of a few. So risk pooling is not going away in any case. What is changed is that the level of mutualization is reduced because you have smaller clusters, more homogeneous pricing clusters.
Yeah, that's really interesting. And I think if you think IoT broadly will lead to people will just self-insure, you're missing the original reason why insurance existed in the first place. And even people who think that they're not risky drivers, or they still recognize there's bad weather, there's other drivers, there's, tree limbs falling, there's other reasons. And with what cars cost to repair right now, any one of those is probably more than you're going to pay for insurance anyway. Even if you're a perfect driver, you still can't get around that kind of thing. I do want to ask you about the future, and there's two things I want to ask you about that. One is on the IoT side and in your core expertise area, but also you have been more vocal on some of the startup carriers and the underlying, some of the lack of kind of material advantage that they have, the questionable results, financial results, and what that means for them. I am curious on that piece, without getting into any of them in particular, unless you want to, but do you think that there's room for some of these startups to ultimately succeed? Or do you think that ultimately there isn't a place for them, or the underlying economics don't allow for them to get past the hurdles that they face right now?
I believe that some of them will survive, and this is a success.
Yeah.
I think that what we have heard for a few years, that they were superior in the ability to pricing the risk and all these fascinating storytellings were stories.
Yeah.
A few days ago, one of the listed full-stack InsurTech carriers shared in their communication with investors, with the shareholders, that in the last 12 months, they filed 100 changes in their pricing. So, 1 year ago, if you go back to their communications, they were saying that their pricing was amazing. Their AI was leading edge, was the best way to price the risk in the market. So I think that they are trying to fix the stuff, but they have lied for years.
Yeah.
And then with their stories, fascinated the sector. They have contributed to nudge the incumbents to innovate. So we need to thank them for this effort.
Yeah.
But we need to have I think, more pragmatic lens when we look at this story.
Yeah, I appreciate that, and I think people should know you're not just an incumbent carrier person who has no space for the startups. You've been in the space yourself. You had a Spac. I mean, you've been. So it's not that you're just. There are people who are just sort of inherently against the new players, and that's not you. You actually have a background in both sides.
I believe in innovation. I focused always my attention on things that can improve.
So Matteo, the other piece of the future I want to ask you about is in the IoT space. Where do you think it's headed then? Because it's not, as you say, it's not usage based as you defined, I think, much more clearly. So where are we going?
Let's say, I think that we need to be really pragmatic in looking at the way IoT data can be used in the insurance business. I think that there are many opportunities to improve the customer experience, to create an engagement, to generate services that can be wrapped around the insurance policy, to impact core insurance processes as claims management, as the pricing that we defined before. There is the opportunity to prevent risks. And then you can even use the data for creating opportunities to upsell and cross-sell the policyholder, or even to insure new kind of risks. So my perspective is that any carrier, based on its own strategy, distribution channels, ambition, can find a way to leverage these data that are more and more available in the sector, in any sector of the economy, in the life of people. So looking at them as personal line policyholders, and in the business of enterprises, looking at the commercial lines. So this connected data is an opportunity. Insurers can leverage this opportunity, and there are many ways for doing it.
Matteo, before we lose our connection again, I want to just thank you for the time, and for watchers, listeners. This was much longer than what you would see. We had to restart several times, but you really are in what's brewing in where the industry is going. So I'd love your perspective on that, and I think it's important to see that, as you say, just because something isn't taking off like usage based, it doesn't mean don't have an offering to solve for that if the time comes up. It doesn't mean just because the startups may not have the financial underpinning to succeed ultimately, that there aren't things to learn from them, that there isn't ways that they're pushing us from an innovation standpoint. I think you have a great perspective on taking all that in. So thank you for sharing all that today.
It's been a pleasure.
Thank you to Matteo for sitting down with me. If you didn't catch it, we had all kinds of issues. My power went out basically as soon as we started recording, and then his connection went out a couple of times. It's very difficult, and it seemed like there was one question I kept asking him when the connection would drop, and it was like the universe's way of saying, don't ask that question and just move on. But we got through it, and so you'll see some breaks in this episode. It's not how we usually do things, but I didn't have a choice, and his insights, his views are just too valuable and too important not to try to stick with it and get it done. So hopefully you can all still get so much insight and inspiration from Matteo. He has this really interesting background. He does a ton of work on the incumbent side, and he's connected to, name the carrier, most of the majors really globally, but then he also has a background on the InsurTech side. And I think the way he put it so amazing, he's like, dedicated to and loves innovation, and he believes in innovation, I think is how he puts it. That's what we need, right? Innovation and being open to it. And, even how he talked about usage-based or pay per mile, he's not bullish on that. He doesn't think that's the right answer, but he also didn't say, never do it, don't try, don't create something if you can, just don't expect it to be the end all be all. So I think this is the real takeaway, aside from lots of other valuable points, but for all of us to say, there are things going on that maybe we don't think are the path forward, or maybe it's hype, maybe it's not where things are going to go, but that doesn't mean don't have optionality, don't have flexibility to be able to respond to that. I talk a lot about planting the seeds, and I think that's exactly what Matteo's saying is engage in this stuff. Don't just write it off, learn from it, grow from it, see what you can do. And ultimately, risk transfer, risk pooling, these are still the fundamental principles, as he says. So that means there's still opportunity for us. We do have to engage in a more innovative and different thinking way. So huge thank you to Matteo, not just for coming on and sharing those thoughts, but for battling through all of the technology issues that we face to get it done. It's always great to get some time with him and to hear him in person. If you haven't done that yet, you should. He is fantastic, really inspiring, and brings such passion to what he talks about. I love that. So thank you to Matteo. Thank you to all of you. And thank you to Marble for sponsoring this episode. And I will see you all back here next time. Thanks, everyone.